Yes, students, now we will revise the deductions topic which is covered in chapter 6A of Income Tax Act from section 80C to 80U. These deductions are allowed based on different criteria. There are few deductions which are allowed based on payments, few are based on investments or donations or contributions, and few are based on incomes. That is, an assessee has an income against which he can claim the deductions. The deductions will actually help the assessee to save tax, because once the assessee claims the deductions against the gross total income, the total income of an assessee will come down, and accordingly the tax liability will be reduced, guys. So this is more of tax planning for an assessee in order to save his tax. And one thing you guys have to be careful is, guys, exemption is different from deductions. If an assessee is eligible for an exemption, he can claim that exemption under the respective head while computing the income under that head. For example, while computing the income under the head salary, if assessee is eligible for any exemption for HRA or gratuity or pension, he can claim all those exemptions under the respective head only. Correct? Same way, while computing income under any head, if assessee is eligible for any exemption which is based on the source of income, which is given in section 10 clause anything, he can claim it under the respective head. And most of the general exemptions are given in section 10, guys. There are some special exemption which is given in section 11, 12 and 13, but those are not covered in your syllabus. Then there is one more list of exemptions which is allowed. There is one more list of exemptions which is covered under the capital gains head under section 54 series, and this exemptions can be claimed only against capital gains income if the assessee is ready to invest the capital gains income in the new assets. Yes, so any exemption, claim it under the respective head. And coming to the deductions, there are two set of deduction. The first set of deduction is what we would have already claimed while computing the income under the each head. For example, while computing the income under the head salary, there are three deductions which are given under section 16. Same way, while computing the income under the head house property, we would have claimed three deductions. First one is municipal tax or property tax paid by the owner. Yes. Second deduction and third deduction is given under section 24, that is 30% of NAV, which is allowed as standard deduction. And the second one under section 24 is the interest on housing loan. Okay. Same way, while computing the income under the head PGBP, there are list of expenses which is allowed as deductions from section 30 to 37. And while computing the income under the head capital gains, we can claim again three deductions. What are those? The expenses on transfer, cost of acquisition, and cost of improvement, guys. And while computing even and income under the head other sources, if there is any expenses incurred by the associate to earn such income, he can claim it as an expenses. But be careful, no expenses can be claimed against casual income or whatever deemed dividend which an associate has earned by way of buyback of shares by a domestic company. Yes, so each of this in detail we have already learned under the respective head, guys. Okay. Now, the second set of deductions is what we will learn in this chapter, and it is always allowed against gross total income. So, we'll be learning two lists of deductions here. That is chapter 6A deductions, which is covered from section 80C to 80U, and the other one is 10AA deduction. And please be careful, guys. This is a deduction and not exemption. And this deduction is available only for the assessee who is engaged in the business in SEZ area and doing exports. Okay, this I will cover it at the end of this chapter. First, let us focus on chapter 6A deductions, guys. Okay, let me just explain you this format. Guys, once we compute the income under each head, then if required, if it is there, if any, I will make an adjustments for clubbing of income. And whenever there is a clubbing of income, it will always be clubbed under the head income from other sources for the assessee. Whereas with respect to set off and carry forward of losses, we already learned in detail, sir, how to adjust it and can I adjust it within the same head or outside the head and all, we have learned it. But please be careful, just because I have given here doesn't mean that you'll adjust always the loss here. No, no. Just as a format I have given here, but the loss adjustment will always depends on whether it is intra or inter, or it is a current year loss or brought forward loss, and also depending upon the nature of the loss, guys. Okay. So after all these adjustments, we get a gross total income against which the assessee can claim these two deductions. One thing we should always check is the amount of deduction which an assessee is claiming here can never be more than gross total income, guys. So the maximum deductions which he can claim, both this put together, is the gross total income or less than that. Got it? Yes. Sir, what if by chance if gross total income is nil? Then assessee cannot claim any of these deductions. Sir, what if assessee has only loss? He doesn't have any income. Even in that case, he cannot claim these deductions. Even though he is eligible, even though he is making investments, contributions, donations, still he cannot claim these deductions, guys. Got it? Yes, sir. Then this is a very important point, guys. An assessee cannot claim these deductions. Whatever we are learning in this chapter, these deductions cannot be claimed against capital gains special income under section 111A, 112 and 112A, which is special in nature, and also against casual income under section 115BB and BBJ. So in simple, assessee cannot claim the deductions against capital gains special income and casual income, which is always taxable at special rate, guys. Okay, that means I will just try to explain with an example. Please pay attention. Assume, guys, the gross total income of an assessee is 50 lakh, which includes capital gains special income 10 lakh and casual income 5 lakh. Remaining is the normal income taxable at normal rate. Now, if I ask you what is the maximum deduction which an assessee can claim, all the sections put together from ATC to ATU along with 10AA, maximum deduction how much he can claim is 35 lakh. Is 35 lakh, guys. Means against this 15 lakh, he cannot claim deductions. So whenever gross total income includes any capital gain special income or casual income, please reduce it. Only the remaining amount is the maximum amount of deduction which can be claimed by the assessee. Fine, sir. Then we have a provision with respect to income based deduction under section 80AB and AC. What is it? We will see. As per section 80AB, deductions specified in chapter 6A under the heading C, that is, we call it as income based deductions, deductions in respect of certain income, shall be allowed only to the extent such income computed in accordance with the provisions of Income Tax Act 1961 is included in the gross total income of the assessee before claiming deduction. And also, the return of income should be filed on or before the due date given in section 139 subsection 1 as per section 80 AC. Okay, let me combine both of this and explain. But before that, guys, you should have an idea about what all sections are covered under heading C. Heading C, I'm just showing it. It is a part of my provision book. You can just have a look into it. These are the list of sections which will come under heading C or part C of chapter 6A deductions. Okay, and what is covered in your syllabus is only few sections out of this: QQB, RRB and JJW. Only these sections are a part of your syllabus, guys. Rest of them is not a part of your syllabus. Okay, sir. Hope you went through. If you want, you can just pause the video and go through. I will just show it once again. Oh. So if assessee want to claim any of these deductions, guys, then first include the income under the respective head while computing gross total income, and then go and claim deductions. And deduction will be allowed only if the assessee is filing the returns within the due date. Sir, what if by chance if assessee is filing belated returns, that is after the due date? In that case, heading C deductions will not be allowed. Even though assessee is eligible, he cannot claim it. Got it? Yes. Similar to loss returns. Okay. Where only if assessee files the loss returns, he can carry forward the loss, right? Yes. That is within the due date, except house property loss and unobserved depreciation. Same way here. If assessee want to claim any deductions under the heading C, first file the returns within the due date and include that income under the respective head, then go and claim the deductions under the respective section. Oh, now we will learn the list of deductions under chapter 6A, guys. So for deductions, I have tried to simplify and prepared a table here where I have given each deduction is available for whom And deduction is for what? And what is the maximum deduction? These are very, very important, guys. You have to keep in mind. Okay. And most of the deductions are available only under optional scheme. And what is available, what is not available under the default scheme, I would be discussing at the end once I cover all the list, guys. Okay, let us begin. First, section 80C is an investment based deduction available for individual and HUF. For what and all? There are number of items covered under section 80C, guys. What are those? Life insurance premium paid, that is, if assessee has taken any life insurance policy and on which he is paying a premium, he can claim it as a deduction. Sir, how much? Maximum 10, 15 or 20% of the sum assured, guys, depending upon the date of policy. If the date of policy is on or after 1st April 2012, then maximum he can claim is 10% of sum assured. And if by chance, if he has paid more than 10% of sum assured, assume the sum assured is 10 lakh, but he has paid 1 lakh 20,000. So 10% of 10 lakh comes to how much? 1 lakh. So maximum he can claim 1 lakh. Even though if he has paid more than 1 lakh, it is restricted only to 1 lakh. Is that clear? And with respect to this 10%, 15%, and 20% and all, I have already discussed while learning or while teaching section 1010D under the head income from other sources, guys. Oh, next, let us continue. Deposit in public provident fund, statutory provident fund, or recognized provident fund, or Sukanya Samruddhi account, which can be opened in the name of girl child. Then pension fund set up by any mutual funds, fixed deposit for a period of 5 years, senior citizen scheme, tuition fees paid for the children's, principal repayment of housing loan, stamp duty or registration fee. For all these deductions are available under section 80C, and all this put together, maximum how much? 1 lakh 50,000. Okay. Then coming to section 80CCC, again available only for individuals. Please be careful. 80C was available for individual as well as HUF, whether resident or non-resident. Whereas 80CCC is only for individuals. Okay. Again, resident or non-resident. So for what? Contribution to pension fund of LIC or any insurer approved by IRDAI, that is Insurance Regulatory Development Authority of India, guys. Maximum 1,50,000. Then under section 80CCD subsection 1, an individual can claim deduction for his contribution to National Pension Scheme, NPS in short. Okay. And subsection 1 is giving deduction for whose contribution? Assessee's contribution. Whether he is in employment or not. Even self-employed people can open this account. Yes, sir. How much is the deduction? If an assessee is in employment, then 10% of salary. Or if he is a self-employed person, then it is 20% of gross total income, guys. And under each section, we had a maximum limit, right? Yes. But now section 80CCE is telling all these three sections put together, you cannot claim more than 150. You cannot claim more than 150. Okay. So there is an aggregate limit for all these three sections put together, which is 1,50,000, guys. Then coming to 80CCD subsection 1B, for which deduction is given for assessee contribution. Again, assessee contribution was already covered here for NPS, but here again they are giving a bonus of 50,000. So B for a bonus of 50,000, guys. Okay. So you can see here employee or assessee contribution to employee or assessee contribution to NPS account or NPS Vatsalya, that is opened in the name of minor child, an additional deduction of 50,000 in aggregate. In aggregate. So if assessee cannot claim deduction for his contribution here, he can come and claim here, but maximum 50 here. If the contribution is more than 50, then check whether you can claim here. If not, forget it. That's all. Because there is a maximum limit under section 80CCE, guys. Okay. And one important thing, guys, here, there is an amendment. So please be attentive now with respect to NPS Vatsalya. NPS Vatsalya is an account which can be opened in the name of minor child by a parent or guardian, and whatever contribution they are making to this NPS Vatsalya is allowed as deduction under section 80CCD subsection 1B, guys. Got it? Maximum 50,000. Maximum 50,000, and I have already explained this concept in detail in an amendment video, guys. So there is a separate video for income tax amendments. If you have not yet watched, do watch it there, because I have explained the provisions with respect to NPS Vatsalya in detail there. Okay. Now, sir, assessee can open the NPS account in his own name. He can also open NPS Vatsalya in the name of minor child. For both 50-50 will be allowed, or both put together aggregate is 50, sir. Both put together aggregate is 50,000. Clear? So please be very careful with it. Okay, then let us proceed further. 80CCD subsection 2. Guys, please be careful. Subsection 1 as well as 1B both talks about assessee contribution. Whereas subsection 2, the second party is coming into play. That is the employer. So employer contribution to NPS account of any employee is allowed as deduction in the hands of employee under section 80CCD subsection 2. How much, sir? If employer is a central government or state government, then 14% of salary. No, sir, employer is non-government. In that case, 10% of salary. But if an employer is a non-government, but if employee is following default scheme, then he can claim 14% of salary. If employee is following default scheme. Got it? I repeat. If the employer is central government or state government, then 14% of salary is allowed as a deduction for employer contribution in the hands of employee. Okay. Whereas if employer is a non-government, check which scheme the employee is following. If employee is following optional scheme, then 10% of salary is allowed as deduction for employer contribution. If employee is following default scheme, then 14% of salary will be allowed as deduction for employer contribution in the hands of employee. Got it? Yes. And here, irrespective of the scheme followed by employee, it is 14% when the employer is a government. Okay. Then section 80CCH, which talks about Agnipath scheme, assessee contribution as well as central government contribution. Central government is nothing but employer here. 2. Agnivir Corpus Fund. And here assessee is nothing but Agnivir, guys. So this is a scheme of central government for those who are working in Indian Army. So here both for assessee contribution, that is Agnivir, as well as employer contribution, which is central government, deduction is allowed. How much, sir? Whatever is the actual amount of contribution. Whatever is the actual amount of contribution. Okay, please listen here, guys. So both these deductions are given for employer contribution also. Yes, but first include the employer contribution under the head salary while computing the income from salary. Then come and claim the deduction. Then come and claim the deduction here. Okay, but only employer contribution to NPS or Agnipath scheme has to be included in the gross salary of the employee. Then come and claim the deduction here. Whereas for employee or assessee contribution, straight away come and claim deduction here because it is an investment for him. Ah. Then coming to 80D. So 80C, especially all the deductions were with respect to investments, guys. So assessee or employee care for their future. So that is why they are making the investments. So for all this investments or payments, deductions is given under section 80C series. Okay. Then we will move to 80D series now. Oh. So 80D gives deduction for two things. One is medical insurance premium, or we also call it as health insurance premium on health insurance policy. The other one is medical expenditure. For this, we have two set of people. First one is associate and family. The second one is parents. Okay. Sir, who is covered in family? Parents are not covered? No. As there is a separate list for parents. So in family, who is covered? I have given you. You can just see. Family means for this section, spouse and dependent children in case of an individual and in case of HUF, any member of HUF. Okay, sir. Now, if associate has taken any health insurance policy or medical insurance policy in his name along with his family or in the name of his parents, that is father, mother or both, maximum he can claim a deduction of 25,000 for associate and family and 25,000 for parents. And if any one of them in one particular category is senior citizen, then instead of 25,000, they can claim a deduction of maximum 50,000 in both the cases. In both the cases means maximum is 25,000. Okay, that is actual premium paid or 25,000, whichever is lower. Sir, is it both put together 25 or is it 25 plus 25? 25 plus 25. For each category, it is 25 each, guys. Okay. But if any person in the category is a senior citizen, the limit is extended to 50,000. For example, assume assessee is a senior, but family members are less than 60. In that case, what is the maximum deduction allowed here? 50,000. Same way, assume assessee and family are not senior. That means maximum they can claim how much? 25. But in this category, only father is senior. What is the maximum deduction allowed? 50,000. Even if one person in that particular category is senior, then you can claim a higher limit of 50,000. Clear? And please be careful, it is not a flat deduction. Actual premium paid or 25,000 or 50,000. 25 or 50, any one will come, not both. Whichever is lower. Whichever is lower. And whatever we saw, 25,000 or 50,000, in that up to 5,000 can be paid for preventive health checkup. Preventive health checkup, either for associate and family or parents. Sir, can I claim totally 5 or 5 plus 5? No, no. You cannot claim 5 plus 5. Both put together maximum 5,000 for preventive health checkup, which can be paid in cash. Whereas the premium has to be paid in any mode other than cash. Okay, sir. And please be careful, guys. It is not 25,000 plus 5,000. 25,000 or 50,000 as the case may be, includes 5,000. So 5,000 is a part of it. Oh, then coming to the second type of deduction covered under this section, which is medical expenditure. And medical expenditure is allowed as deduction only if a patient is a resident senior citizen in whose name policy is not there. Because if policy is there, the expenditure will be taken care by whom? Insurance company. So here they are giving deduction for medical expenditure only if a patient is a resident senior citizen in whose name the medical insurance policy is not there. In that case, for associate and family, maximum deduction is how much? 50,000 straight away. And for parents, both father and mother put together, it is 50,000. Is that clear? Guys, for the same person, you cannot claim this as well as this. So it will be either premium or expenditure, any one. Got it? Because for those in whose name the policy is there, for them, the deduction for medical expenditure will not be allowed, guys. Got it? Whereas there can be a case where father is covered here, mother is covered here. Can it be? Yes. Or else can it be a vice versa? For example, mother is covered here, father is covered here. Yeah, it can happen. And the same way, associate is covered here, family is covered here. It can happen. It can happen. Okay. But there is one more twist. So for medical insurance premium, assume for parents, both of them are senior citizens. Father is covered here, whereas mother is covered here. That means how much can I claim? 50 year, 50 year, correct? Yes. But individually you can claim 50-50. In aggregate, it is restricted to 50,000 for each category. Both put together. Same way. Assume assessee is covered here, whereas family is covered here. Clear? And assessee is a senior citizen. That means you can claim 50,000 here. Whereas family members are, assume like wife is also senior citizen. So for maximum is how much? 50,000. But both put together, in aggregate, you can claim only 50,000. 50,000, guys. Hope you understood. First, check individually for premium and for each category, and for medical expenditure for each category. And then check aggregate. For associate and family, both put together cannot be more than 50,000. Same way, for parents, both put together cannot be more than 50,000. Is that clear? Yes, sir. So you can see here, I have mentioned the maximum deduction under this section is 50,000 for associate and family, both put together, that is premium as well as expenditure. And for parents also, maximum 50,000, because there is a possibility that a father is covered here and mother is covered here, or vice versa, mother is covered here and father is covered here. In that case, can I claim 50 plus 50? 1 lakh? No, no. Maximum is 50,000. Maximum is 50,000. So whatever you are paying, maximum 5,000 for preventive health checkup can be paid in cash. Whereas medical insurance premium or medical expenditure has to be paid in any mode other than cash. Only then deduction will be allowed to the assessee, guys. Oh. Then coming to 80DD, if assessee is taking care of a person who is dependent on assessee and suffering from disability, then assessee can claim a flat deduction of 75,000. And if the dependent is suffering from severe disability, that is 80 or more, then assessee can claim a flat deduction of 1,25,000, guys. So it is 75,000 or 1,25,000, not both. If question is silent, please go with 75,000. If question is clearly mentioning that the dependent is suffering from severe disability, then you provide for 1,25,000. And please be careful, guys. It is a flat deduction available only for resident, individual, and HUF. So assume there is a dependent on me who is suffering from disability, my brother. I am taking care of them, or I am taking care of him. Irrespective of the actual expenditure I have incurred, I can claim a flat deduction of 75,000. And if by chance, if my brother is suffering from severe disability, then I can claim a flat deduction of 1,25,000, guys. Okay. Then 80 DTP is available for resident, individual, and HUF with respect to medical treatment for specified disease. And what is the amount of deduction available is actual expenditure or 40,000, whichever is lower. Or if by chance, if patient is a senior citizen or super senior citizen, that is the patient, then the amount of deduction is actual expenditure or 1 lakh, whichever is lower. And once we get whichever is lower, if there is any amount which is recovered from insurance company, or if it is reimbursed by the employer, then we need to reduce the balance, if any, will be allowed as deduction, guys. Or next, so whatever we covered under section 80D series is with respect to medical or health, guys. So when we are scared of the disease or death, okay, death obviously will come under insurance. But now, sir, I am scared to go to a doctor, or I am scared of a disease, then I would have taken health insurance policy, or I have already got a disease. Now I am going to a doctor. So doctor is giving me a treatment for which he is charging the money. So medical expenditure incurred, can we claim as a deduction? Yes, under section 80D or DD and DDP. And DD especially is very easy to remember. Dependent is suffering from disability. Dependent is suffering from disability. And there is a section connected to this, that is 80U. Let us cover it, guys. Come to 80U, which is in the next page. Yeah. 80U deduction is available when assessee himself is disabled. When assessee himself is disabled but is not dependent on anyone. So assessee can claim deduction under section 80U for himself. How much? 75,000 flat deduction, or if he is suffering from a severe disability, that is 80% or more, it is 1,25,000, guys. But for the same person, another person cannot claim deduction under section 80DD, guys. For example, assume I am suffering from disability and I am independent. I am earning my own bread. So I am claiming a flat deduction under section 80U, that is 75,000 or 1,25,000. Now, can anyone else claim a deduction in my name under section 80DD? No, 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 sorry. It is not possible. Clear? That is only when the disabled person is dependent on the assessee. That is under 80DD. So if the dependent person is independent, then he himself can claim deduction under section 80U, guys. So easy to remember. You yourself is disabled. In that case, you can claim a deduction under section 80U. And one more thing, if an assessee has taken a life insurance policy in the name of a dependent who is suffering from disability, and when dependent was alive, if assessee has claimed deduction under section 80DD, if in case if this dependent person dies and if the policy matures, which was taken in the name of dependent who is suffering from disability, when policy mature, exemption under section 1010D is not available, guys. We had covered this under the head income from other sources. So it will be taxable. Normally, the nominee will be the assessee himself. So when he receives the amount on the death of the dependent disabled, okay, that is the person who is suffering from disability and dependent on the assessee. When he dies, whatever money the assessee receives will be taxable under the head other sources. Okay. Next, let us go to E series. E series will give exemption, sorry, deductions for interest, not exemption, deduction, guys. Okay. First, ATE is available for individual for interest on education loan. So repayment of interest on education loan taken for an higher education, that is after senior secondary examination, guys, that is after plus 2. Only the interest component is allowed as deduction here, whereas principal amount cannot be claimed as deduction here. Sir, what is the maximum amount of deduction? There is no limit with respect to amount, but you can claim deduction for interest on education loan for a maximum of 8 years from the year in which interest started accruing. Sir, what if within 8 years, if loan is fully repaid, then you can claim only for that many years. Sir, what if I am repaying the loan even after 8 years? I am keep on repaying till 15 years. You can claim maximum deduction for 8 years, guys. Okay. Next, 80EEA gives deduction for individual for interest on housing loan. This is an additional deduction for interest on housing loan which is borrowed between 1st April 2019 to 31st March 2020 for acquisition, that is purchase or construction of a residential house property. Guys, if it is a house property and self-occupied, you can maximum claim 2 lakh deduction for interest under the head house property as per section 24B. And this 1,50,000 is over and above that. So totally 2 lakh under house property plus 1,50,000 here. And sir, what if it is a let out property? If you have a let out property and if you have taken a housing loan for it, whatever is the interest, you can claim fully under the head house property without any limit. But is this deduction available even for let out property? Yes. As a tax planning, if you want to claim 150 year and remaining under the head house property, you can do it. You can do it, guys. Oh, then, and please be careful here, the value of the property, that is the stamp duty value of the property cannot be more than 45 lakh. It should be affordable house and loan should be taken only between these dates. In that case, even interest paid during the previous year can be claimed as deduction. Then 80 EEB. If assessee is purchasing any electric vehicle for which he has borrowed a loan, whatever interest is paying on that loan is allowed as deduction under section 80 EEB, maximum 1,50,000. Maximum 1,50,000. And whatever is allowed as deduction here, no, assessee cannot claim again this amount as an expenses under the PGBP or elsewhere, guys. Okay, because he cannot take double benefit. Next, done with E series. E series is all about interest on various loans, guys. E is interest on education loan. EEA is interest on housing loan. EEB is interest on the electric vehicle loan. Okay. G is for givers, donors. Okay. 80G. Here the deduction can be claimed by any assessee including company, partnership, firm and all. And donation is for various, if you are giving any donation to various funds or charitable purpose, you can claim deduction here. And how much deduction depends upon the purpose and category, which we will discuss. But here you cannot give more than 2,000 in cash. Assume I gave 10,000 donation in cash. Can I claim the deduction? No. Up to 2,000 you can give it in cash, but not more than 2,000. Okay. And ATG is important. To explain this, I will try. I will take an help of my provision book. Just a minute. If you have provision book, you can come to section ATG. Yes. Yes. So if assessee is giving any donation for various purposes, for that, as it is for a good purpose, deduction is given under section 80G, guys. And there are 4 category covered here. Category A, B, C, and D. If donation is given for the category which is covered under A, 100% of the amount which is donated is allowed as a deduction without any limit. Without any limit. And what all things are covered under category A? I am just showing you. Have a look into it. Most of them are related to national, prime ministers and all, guys. Oh, I will not be reading it because it will take time. Hope you guys would have already stated this. Then coming to B category, only one thing is there, that is Prime Minister's Drought Relief Fund, for which 50% of the amount donated is allowed as deduction without any limit. That is without any qualifying limit. Okay. Then whatever contribution you are making for this 2 purpose, which is covered under C category, 100% of the amount is allowed as deduction but subject to qualifying limit. What is qualifying limit? We will see later. Okay. Then if you are contributing for any of this which is covered in D category, 50% of the amount contributed will be allowed as deduction, but again subject to qualifying limit, guys. So whatever you are contributing for C and D category, you can claim 100% and 50% respectively, but both are subject to qualifying limit. So what is it? We will see. What is it? We will see. Steps for computation of qualifying limit. First, compute the adjusted total income. Sir, what is adjusted total income? Guys, take the gross total income of an assessee and from that remove any capital gain special income, if any. If any, means if gross total income includes any capital gain special income, remove them. And reduce all the deductions under chapter 6A from section ATC to ATU, but except ATG. Because ATG, we are yet to calculate. Got it? I repeat. Adjusted total income means take gross total income of an assessee, and if gross total income includes any capital gain special income, remove them. Sir, what about casual income? Guys, casual income is not asked to remove here. But we already learned that against casual income, we cannot claim the deductions. But anyway, some loose connections is there in the law, but that is how it is given, guys. Clear? Yes. So we need to remove only capital gains special income and not the casual income. And we should also reduce all the deductions from section ATC to ATU under chapter 6A, but except ATG, because ATG we are doing it now. Okay, fine, sir. So calculate adjusted total income, take 10% of it. Fine. Then in step 3, calculate what is the total amount of donations which is made for category C and D purpose. Add up both. Okay, that is category C as well as category D. Add up both. Then compare step 2 with step 3. That is the total amount of donations made for category C and category D. Compare that with 10% of adjusted total income and take whichever is lower. Whichever is lower. And whatever amount you get, allocate 100% of that first for C category. And remaining amount, 50% of that you need to allocate it for D category. D category. I know, little bit confused. You guys are little bit confused. So that is why I will explain with some illustrations, guys. Okay. Number of cases I have taken. Assume, guys, assessee has contributed 1 lakh for each category. Each category, 1 lakh each. Totally 4 lakh. Okay. So what is the percentage of deduction under section ATG for A category? 100% of 1 lakh, which comes to 1 lakh. Claim it fully. No problem. No comparison with adjusted total income. Then for B category, 50% of actual amount contributed. So that means 50,000. Claim it. No comparison with adjusted total income. Now coming to C and D category. C and D both put together, what is that aggregate contribution? 2 lakh. And check what is the adjusted total income, which I have already given 15 lakh. If it is not given, you need to calculate in the questions. Okay, I told you how to calculate it already. Yes. So adjusted total income is 15 lakh. So both the C and D category, whatever contribution is made, it is subject to 10% of adjusted total income. No? Yes. So take 10% of this, which comes to 1.5 lakh. So compare 1.5 lakh with 2 lakh. Take whichever is lower, which gives us 1.5 lakh. So out of 1.5 lakh, first allocate it to C category. So how much is the contribution for C? 1 lakh. Give 100% of that for C category. 1 lakh rupees. Then remaining is how much, guys? 1.5 lakh minus 1 lakh. Remaining is how much? 50,000. So 50,000 is remaining for D category, but can I give it fully? No. Only 50% of 50,000, which is 25,000. Which is 25,000. Okay. Second case, everything remains same, but adjusted total income I have changed. Okay. A category, B category, copy paste. Okay. Fine. So aggregate donation made for C and D categories 2 lakh. Okay. 10% of adjusted total income is 2.5 lakh. Compare both, take whichever is lower, 2 lakh. Out of 2 lakh, first give it to C category, which is 1 lakh. So 100% of 1 lakh is 1 lakh. Remaining is how much, guys? 2 lakh minus 1 lakh. Remaining is 1 lakh. 50% of that give it to D category, which is 50,000. Which is 50,000. So what is the total deduction which an assessee can claim here? 3 lakh under section 80G, guys. Kya chahiye? 3 lakh. Okay. Now, last case. I have changed the adjusted total income to 8 lakh. Rest all remains same, guys. So C and D put together, what is the total actual donations? 2 lakh. Compare that with 10% of 8 lakh, which is 80,000. Whichever is lower, guys, 80,000. So first allocate it to C. What is the actual donation for C? 1 lakh. So 80,000 is less than 1 lakh. So claim full. Claim full for C. Sir, what about D? Nothing. Thank you. Nothing for D as we don't have sufficient money. So what is the total deduction in case 3 under section 80G is 2 lakh 30,000. Okay, and please be careful in case 2 and case 3, A and B remains same. There is no change in that. Only C and D I have tried to explain because that is where normally students get confused, guys. Okay, sir. Fine. Coming back. Next, GG. An individual can claim deduction here for the rent paid, but please be careful. This deduction is only for the assessee who is not claiming exemption for HRA under section 1013A. So if employee is receiving house rent allowance from employer, he will claim exemption under 1013A only? Yes. Can he also claim deduction under 80GG? No, no, no. This is not for them. This is for anyone else who is not in employment or who is in employment but not receiving HRA, guys, but paying rent. But paying rent. Oh. So list of the following is allowed as an exemption. What is it? Actual rent paid by an assessee minus 10% of adjusted total income. Oh. Or 25% of adjusted total income. The last one is 5,000 per month. 5,000 per month means maximum for a year. What is the deduction allowed here is 5,000 into 12, 60,000. And here, sir, what is this adjusted total income? It is same like 80G, guys. So for section 80GG, adjusted total income means take the gross total income of an assessee. If it includes any capital gain special income, remove it. Then reduce all the deductions under chapter 6A from 80C to 80U except 80GG. 80GG. Clear? Yes, sir. And sir, what if the same assessee is eligible to claim both the deduction 80GG as well as GG? Then in order to calculate the amount of deduction, we need to form some equations and all. But don't worry, such questions will not be asked in your exams, guys. Okay. Next, 80GGA gives deduction for any assessee but not having the income under the head PGBP. Why, sir? Because if he has income under the head PGBP, for this, he can claim the deduction under the head PGBP itself. So this deduction, 80GGA deduction is for an assessee who doesn't have an income under the head PGBP. So deduction is for what, sir? Certain donations for scientific research, social science or statistical research or rural development or national urban poverty eradication fund. And it should not be more than 2,000 in cash, guys. It should not be more than 2,000 in cash. That means up to 2,000 you can give it in cash. If you are paying more than 2,000, then you have to give it in any mode other than cash. And even for this 80G, I guess I already mentioned it, more than 2,000 cannot be given in cash. Okay. So here under section 80GGA, whatever amount is contributed for the following purpose, 100% will be allowed as deduction. Then GGB GGC gives gives deduction for donation to political party or electoral trust. If an Indian company is giving any contribution to political party or electoral trust without any monetary limit, they can claim deduction for whatever actual amount they are contributing. Then, if anyone else other than Indian company is contributing to political parties or electoral trust, they can claim deduction under section 80GGC. But whatever amount they are contributing, they can claim, but they cannot give it in cash. Both these sections will not entertain cash donations, not even 1 rupee. Not even 1 rupee you can give it in cash, guys. Got it? Yes. And this deduction under section 80GGC is not available to a local authority or artificial juridical person who is funded by government, guys. Who is funded by government. Okay. Next, deductions in respect of certain income. First, 80JJAA, QQB and RRB. Guys, please be careful. This 3 is a part of heading C of chapter 16. Okay. 80JJAA gives deduction for an assessee who is engaged in the manufacturing business and for whom tax audit under section 44AB is applicable. So if they provide employment opportunity, whatever new regular workman or employees are appointed during the previous year for whom wages or salary is paid, wages or salary is already allowed as an expenses under the 8 In addition to that, 30% of wages paid or salary paid to the regular workman is allowed as deduction under section 80JJA for 3 years. For 3 years, guys, starting from the year in which employment is provided. So this is to support the manufacturing entities in order to provide more and more employment, guys. Okay. Then 80QQB and RRB provide deductions for royalty income for the resident individual. Maximum 3 lakh. That is actual royalty income or 3 lakh, whichever is lower. But royalty income on what, sir? 80QQB gives deduction for royalty income of an author or joint author of any book other than textbook. Whereas 80RRB gives deduction for royalty income of a patentee who is registered as the true and first inventor in respect of an invention. Got it? Two different section give deduction for royalty income on different things. Okay, and easy to remember, guys. See, 80RRB talking about the patent right, which is registered in the name of the assessee or patentee. So registered RRB, patent right, registered. Okay. Whereas QQB is a royalty income of books. And in books, normally questions would be there. Yes. So you can remember like that. QQB. And please be careful here. Royalty income of an author for any book other than textbook is there. But just as a shortcut, I am telling you QQB. Books means you just remember it as QQB, guys. Got it? And for both of this section, there is a condition. If royalty income is earned from a source outside India, then that income has to be brought to India in convertible foreign exchange within 6 months from the end of previous year. So previous year will end on 31st March, no? Within 6 months from there means on or before 30th September of assessment year, the money which is earned from foreign sources has to be brought to India in convertible foreign exchange, guys. Or if RBI is extending any time limit, then within that time limit. Okay. Then ATTTA and TTB is important, guys. These two sections give deductions for interest income. Whenever assessee has earned interest income, first include it under the head income from other sources. Then come and claim the deduction here, provided you are eligible. ATTTA gives deduction for any individual or HUF, whether they are resident or non-resident. But here, the deduction is only for interest on savings account deposit with any bank, cooperative society or post office. Maximum 10,000. Sir, what if I have any FD or RD on which I am earning interest? Deduction is not given here. It is only on savings deposit, guys. Okay. Then TTB is a deduction for resident senior citizen only. That is for individuals who is 60 or more. And deduction is for what? Interest on any deposit. Any, not only savings, any. With any bank, cooperative society or post office. Maximum how much? 50,000. Now, if an assessee is eligible for this, can he go and claim this also? No, no. First check whether you are eligible for this as there is higher deduction given here. If yes, only claim that. If not, then you can claim here, but only for interest on savings account. So here, interest on any deposit is allowed. Yes, including FD and RD. Yes, I have also given it by way of chart here. You can see deduction for interest on saving deposit under section 80 TTA for any individual and HUF, whether they are resident or non-resident, less than 60, more than 60, it doesn't matter. If it is more than 60, first go and check 80 TTP. Okay, yes. Maximum is how much? 10,000. Whereas deduction for interest on any deposit is given under section 80 TTB, but only for resident senior citizen. Maximum how much? 50,000. Can the same person claim for both? No, no. For example, sir, I have a savings as well as FD and I am a senior citizen. For savings, can I claim here? And for FD interest, can I claim here? No, no. Both you can claim under this section, but maximum 50,000. Because here any deposit includes even saving deposits also. Got it? Yes. And one important thing, guys, just a minute. One important thing you have to take care is if you have any savings deposits with post office, you can claim exemption as well as deduction. Exemption is under section 1015 and deduction is under section 80 TTA or TTP if you are a resident senior citizen. Okay. Assume I am an individual who is having a savings deposit with post office and I am earning 10,000 income, interest income on savings deposit. So 1015 give me an exemption of how much? 3,500 for an individual account. Remaining income included in gross total income calculation how much? 6,500. So for this 6,500, can I claim a deduction under section 80 TTA? Yes. How much? Maximum 10,000. But here you can claim only 6,500. That is the amount which is included in the income. Got it? Yes. Next example. Sir, what if it is 20,000? Actual interest earned on savings deposit with post office is 20,000. So 1015 exemption is 3,500 maximum for an individual account. Remaining 16,500 will be included here. Yes, sir. Now, against this 16,500, can I claim a deduction under section 80 TTA? Yes, assuming I'm not a senior citizen. How much, sir? 10,000. 10,000. Actual interest of 16,500 or 10,000, whichever is lower. Now, sir, assume the interest on savings deposit with post office is only 2,000, sir. Then claim full exemption under 1015, which is 2,000. So nothing is included in the income under the head other sources. So can I claim any deductions for this? No. No. Yes, sir. So please be careful. Only for interest on savings deposit with post office, you can claim both exemption as well as deduction. First exemption under the respective head, that is income from other sources. Then come and claim the deduction. Okay, guys. ATU, we are already done with. So we are done with all the discussions with respect to deductions under chapter 6A, which is a part of your syllabus. Okay. Now let us see. Sir, if assessee is following default scheme, then can he claim all this, sir? No, no, no. So if an individual, HUF, AOP or body of individual as well as artificial juridical person is following a default scheme given under section 115 BAC, then they can claim only 3 deductions under chapter 6A, guys. Only 3 deductions. What are those? Deduction under section 80 CCD subsection 2, that is employer contribution to NPS. Then a deduction under section 80 CCH subsection 2, that is central government contribution to Agnivir or Agnipath scheme. Okay. Then 80JJW, that is with respect to salary or wages paid to new regular workman. Okay. Only these 3 deductions are allowed, guys. Rest all of them are blocked under the default regime. And if assessee is a resident cooperative society who is following optional scheme under section 115 BAD or BAE, then for them they can claim only one deduction under chapter 6A, which is 80JJW. Sir, what about this 80CCD subsection 2 and 80CCH CCH subsection 2? Guys, these are available only for individuals. Okay, so in that case, they are not at all, cooperative society are not at all eligible for CCD and CCH deductions, whether they are following optional scheme or normal scheme. Yes, and please be careful, for cooperative society, we don't call this as default scheme. We call it as optional schemes. Okay, sir. Then coming to 10AA deduction. 10AA deduction is for an assessee who is doing an operation or who is doing a business in special economic zone area as notified by the government. With respect to his export business, whatever profit is earning, it is allowed as a deduction for first 15 years, guys. So how is it? We will see. An entrepreneur who has begun manufacturing in SEZ between this date, he should have started manufacturing in SEZ area between this date. Okay. That is 1st April 2005 to 31st March 2020. Sir, if I have started manufacturing before this, can I claim a deduction even after this? Yes. Once you have started manufacturing in SEZ in between this date, including that year, totally you can claim deduction for 15 years, guys. Oh. So section 10AA provides deduction to an assessee who derive any profit and gains from export of article or things or services, including computer software, subject to certain conditions. Okay. So if I am operating in SEZ and if I am engaged in export of any goods or services, whatever profit I am earning from export business is allowed as deduction under section 10AA for first 15 years. So how do I do this calculation is, first we need to calculate what is the profit eligible, which is nothing but export profit. How do I calculate it, sir? Take the total profit of SEZ unit, multiply it with export turnover divided by total turnover of SEZ unit. So you will get profit attributable for export business and take that above. So we will do this for all 15 years. For each year, we will calculate it. Okay. For the first 5 consecutive assessment year, 100% of the eligible profit is allowed as deduction. Whereas for the next 5 years, that is from 6th year to 10th year, 50% of the eligible profit will be allowed as deduction under section 10AA. And please be careful, every year eligible profit will be changing. It will not be same. Obviously, profit and turnover of each year will be changing, guys. So we need to do this calculation for each and every year. Okay. And for the last 5 years, that is from 11th to 15th year, 50% of the eligible profit or any amount transferred to special economic zone reinvestment reserve, whichever is lower is allowed as deduction. And in the last 5 years, whatever amount is transferred for special economic zone reinvestment reserve has to be used to purchase new plant and machinery within 3 years. Until that 3 years, can it be used for business purpose? Yes, guys. Means they're trying to block this business or a company who is trying to claim deduction under section 10AA. After 15 years, you cannot vacate from SEZ. Please invest this money, whatever you are transferring to reserve in the last 5 years, in the new plant and machinery and continue your business year. Okay. And what is the amount of deduction which an assessee can claim here is amount as computed above, that is this figure, or the gross total income, whichever is lower. Because even the deduction under section 10AA is claimed against what? Gross total income. So you might ask me, sir, what if a same assessee is eligible for both chapter 6A deduction as well as 10AA deduction? Both put together cannot be more than the gross total income, guys. It cannot be more than gross total income because both of this is claimed against gross total income. Okay. Let me talk little more about this 10AA, guys. See, assessee is doing business. Whatever profit is earning, whether from export business or domestic sales, whatever it is, first include the entire profit under the head PGBP. Whatever profit the assessee has earned from business, include it fully under the head PGBP. Then go and claim deduction under section 10AA for only export profit. Deduction is given only for export profit. So the total profit earned from the business as per the income tax law, include it under the head PGBP. And the same assessee might also have income in another area, which is not a SEZ area. Calculate all those income and include it under the head PGBP. Yes. And then go and claim deduction under section 10AA only for export profit of SEZ unit. Got it? Yes, sir. Now, coming back to this. Next, there is a note telling freight, telecommunication charges and insurance expenses attributable to the delivery of articles or things outside India or expenses incurred in foreign exchange for rendering services, including computer software outside India, are to be excluded both from export turnover as well as total turnover. So whatever export turnover and total turnover which we use to calculate eligible profit, that should not include the following items. That is freight, telecommunication charges and insurance expenses, as well as the expenses which is incurred in foreign exchange for rendering services outside India, guys. Okay. And 10AA deduction is available only for the assessee who is following optional scheme. If an assessee is following a default scheme under section 115 BAC, then he cannot claim deduction under section 10AA for his export profit in SEZ, guys. Got it? Yes, sir. Fine, guys. So this is all about the deductions topic. Now come to the page number 1 of our revision material. So in this chapter, we have covered section 80C to 80U, but whatever was a part of your syllabus. along with section 10AA, guys. Even after this, there are few sections which are covered in your syllabus like section 139, 140 and all. But those sections I have not given here because they are not covered in order or sequence, guys. Clear? So we'll stop marking the sections here and guys, we are almost coming to an end of income tax. Are you guys at par with me? Question yourself. Please question yourself. If yes is your answer, then you are doing great. Please continue with the same. If not, if not, guys, why? What is going wrong? What is not going in your way? You tell me. Everything is possible. Please make sure. Stop giving the reasons. Stop giving the reasons for yourself. And you guys are working for your own better future. So start working, start pushing yourself and study for more and more hours, guys. Exams are nearing. What are you doing? So please make sure that from now on you give your best and you have to get exemption in tax paper. Take care.